Hey everyone, it is Evan here from the Trade Risk on Friday, November 30th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So we're going to jump right into things today. We got a lot to talk about. Let's start off with our dashboard here. Take a look at what's been going on in the market. It was a nice, strong turnaround week for risk assets for the bulls. S&P 500, Dow Jones, Russell 2000, NASDAQ 100, all firmly in the green here on its 5-day performance. You can see up almost 5% across all the major averages. Russell 2000 lagged just a little bit. We closed out the week near the highs of the week. We finished above last week's highs, and we're starting to reclaim some of these moving averages here. We're above the 10 SMA. We are not above the 50 in any of the moving averages. We are above the 200-day SMA. Now, one thing to point out is the slope of these longer-term moving averages are probably flat. They may not be rising anymore. And also, I believe this data, I need to double check on this. I believe this data is using total return numbers. So that means it's including dividends there. Generally, don't look at those for my SMA calculations. So do keep that in mind. Probably going to see maybe a little bit difference if you're looking at the unadjusted data. But regardless, I think just looking here at a snapshot, it was a nice turnaround week here. And the bulls, importantly, held on to those gains. Now, when we scroll down here, we have the risk assets here, risk sectors of the market: technology, biotech, standing in the top third here, top quadrant of the performance. We can see utilities and staples down here at the lowest performers, which is good to see. And when we look at the major markets overall, we saw VIX unwinding a bit. We saw the S&P, China, emerging markets all kind of leading the charge here to the upside. Now, there are, some people would chalk this up to the more dovish speak we're seeing out of some Fed comments, maybe some optimism out of the G20 meeting this weekend, or quite frankly, just an oversold bounce from extreme oversold levels and lots of technical damage that we've seen over the past month of trading. Who's right? I mean, it's wherever camp you want to live. It doesn't really matter. To me, what's important are the technical levels, which we'll jump into right now. When we look here at the weekly chart of the S&P 500, you can see 4.72% to the upside this week. We took out last week's highs. Still, though, not really anything structural changed this week. It was a nice, sharp, and fierce bounce back, but when we look here at just the overall structure, we're mostly still sideways in the same range that we've been in for the past 6-7 trading weeks. In between, call it 2,600 to 2,800, very loosely speaking, and you can see we're just heading back to the top end of that. Now, if we can start to make continuation progress here next week, start rallying above 2,800, start reclaiming this big trend line, then we have some real repair, constructive action, at work. But until we can start to first show that we can hold on to the gains from this week and then eventually lift above this 2,800 level, that is going to be the next big step. For now, we are still range bound in this much larger range here, and then we have this more intermediate range that we can look at. So when we go down to the daily chart now, we'll switch over to the other view. You can see we did clear above this 2,700 level. We cleared above 2,738. That is where, remember, before Thanksgiving, we had this nice little turnaround day here on Thursday the 15th. We had a little bit of follow through, and then the market rolled over during Thanksgiving. We are now back above this area, and again, we're closing strong. So some constructive signs. We talked about it on Tuesday in the midweek video. We said, look, there are some constructive action here. The market didn't completely, roll over to new lows. We talked about it on this day right here. We saw an even stronger follow through day on Wednesday, and then a good finish to the week. So we have the positive divergence, which we've been noting, that is in place. We have potentially that retest that is held. We're not out of the woods yet. I know I'm very optimistic here. I sound encouraging, but I'm just really speaking to the fact that, yes, we did hold. We saw the nice sharp back. We held where we needed to. But now there's more work to do. There's more gains to hold on to, and then eventually resistance here to take out. That is really what we want to see to get the more structural change in this market environment. So a great win for the bulls, snapping back from those oversold territories. Let's see how this weekend goes and how we open up Monday. We have the G20. There's a lot of hope out there, or a lot of eyes at least, on the negotiations here and how the U.S. and China are going to perhaps mend their relationship. It'll be very interesting to see whether or not that does happen, and of course the market's reaction. There's a lot of variables here. There could be some great disappointment if everything just ends as a stalemate, or there could be some more euphoria next week if we do get some signs and constructive behavior that there are terms coming on some of this trade talk. So it'll be interesting. I think if you're holding exposure aggressively, one way or the other, that seems to me like a very risky proposition. To me, I'd want to be hedged or neutralized or controlled position size here into the weekend, because it is a macro sort of, call it a binary event. I know it's not exactly a binary event, but we should expect some catalysts, some news, some headlines to surface that is going to potentially move the market come Monday. So be very interesting to see how the futures open up, how the trade discussions go on this weekend, and what it means for this range and the gains that we just saw. Can we hold on to this next week? Do we start heading back up and retesting the 2800, or are we about to roll back over and properly sort of retest or perhaps undercut the lows back from October? That's what's on the table. That's what we want to pay attention to. For now, short-term bulls have control. Let's see if they can hold on to it. So that, I think, is really the majority of the major market. The VIX, it did come off this week, not tremendously so, and that's probably because we do still have, of course, this event looming over the weekend, the G20. We are closing down around 18. We did fall or pull off about 15%, 13% on the week for a 5% gain in the market. It's not a whole lot that came out of the VIX, but again, it is potentially pricing in some of that uncertainty this weekend. What else? I think that's it. I think that's all I had for the major markets. Let's take a quick look at the IWM here. You can see, again, this also not quite as strong here as the S&P 500, the NASDAQ, and the Dow this week, but it's tough to be too upset with this pattern here. We had this nice little kind of short-term level that we took out again here. So we have this nice little smaller intra-day pattern, intra-week pattern, I should say, that might lift us back up to retest these early November highs. We shall see. I think the lows here from Wednesday, these pivot lows here, they're going to be interesting to see. We talked about Tuesday, that weakness, seeing if this was going to be the canary here, but that never followed through. We saw the bullish reversal on Wednesday and then finished strong on the week. So again, optimism there for the IWM, not as giddy here to the upside, but still, in the short term, it's hanging on. NASDAQ 100 making its way back up to the upper end of this range here. Also had that positive MACD divergence. This did undercut and take out its prior October lows here. So it had that brief day where it closed below it, a little bit of a stutter step, and then it kind of launched higher again. So nice kind of undercut, double bottom, if you will. I know it's not officially a double bottom until you take out the resistance, but I think you guys know what I'm speaking to there. So those are some of the thoughts on the major markets. Let's get to, or the current market environment. Let's get to some of the other major markets. We'll go to TLT, which started to roll over, had some signs that it maybe was going to break trend here, the short-term bullish trend, but it did stabilize into the end of the week. Maybe a little bit of rotation into some of these more safe havens into this uncertainty, but we saw a recovery here, closed back above this short-term line. It's not really drawn precisely, but it's essentially where we peaked out here back in October. We're back above or clinging on to this trend line that extended from the lows here. So short-term, the bulls do remain in control. MACD in positive territory. We'll see if they can continue us higher. My longer-term look on this is still 117 here. I got a 116.80 on my chart, but this 117 level, that's the big elephant in the room for a larger structural level. So long as we are below that, I do want to remain overall cautious. If we start punching through 117 to the upside and reclaiming the support, that would certainly change my opinion or tune here on the long bonds. If we go to oil next, take a look at the weekly chart here. Did finish down slightly, had a good amount of volume coming again. It did close. This is the closing month. We forgot to mention that at the top of the video, but for a brutal brutal month here, 22% to the downside for USO, and that was following up last month, which was down 11%. So it was a really ugly week here, very heavy volume coming in at the end of the month here. When we look here at the daily chart, there's some signs that we are trying to stop the bleeding to the downside. You can see the MACD is attempting to flatten out. You can see price action getting some tails here, trying to flatten out. Still a good amount of volume in, still searching for its footing, but you know, it's still a market that is in play for short term if you're active. Pay attention to this tighter range that has developed over the 5 days or so. If we start launching through $11, $11.10 to the upside, that might spark your snapback rally there in USO. Until and if that happens, got to be a little bit cautious. Natural gas continues to consolidate here, trading just under its highs. It is kind of still in potentially a continuation pattern, which would be extremely bullish given the fact that this thing just ripped, you know, 30% to the upside, or actually even greater, in very short order. Maybe a little triangle, maybe a little continuation pattern here, still yet to be seen. It's covered a lot of ground. It's trying to work that off through time. We had that trade in UNG. We got stopped out earlier this week, so we're no longer in the position, but I would pay attention to this flag. Maybe that would get us back on board if we started to break out to the upside. Love to see a little more consolidation there, but bulls still holding on pretty strong. Gold and metals, GLD, finished the week just about flat. That was, I guess, maybe a minor win given the fact that it was attempting to roll over early in the week. It did stabilize a bit, still clinging on to this 115 area. That was a good line in the sand that we were using. It's getting a little messy in here. The price action's getting tight, a lot of overlapping action. So be interesting to see if GLD is getting ready for a bigger move come the end of the year, or maybe to kick off the new year. But for now, it's still pretty much sleeping. Silver pretty much sleeping as well in the sideways channel, holding above year-to-date lows. Not looking too exciting, but you know, we'll be paying attention to $13.10, $14 on the upside. So let's jump now into some of the sectors here that work this week. If we sort by our 5-day performance, we get technology on the top mark here, 6% to the upside for the XLK. You can see closing right back at last week's highs, recovering all of last week's damage. We talked about this, excuse me, last week, and how ugly this candle was here. Notice though, you know, we didn't have heavy volume. Again, a little holiday shortened week there, so that does make sense, but this was a pretty horrendous looking candle. We came back with, you know, equally sort of unimpressive volume, to be honest, but we recovered that pretty quick. And anytime you get this full 1-bar recovery in very short order, I do tend to like that. Tends to suggest that maybe there's a little more urgency to push to the upside, but it doesn't have to be the case. If we go down to the daily chart here, you can see we are at a kind of a busy area here, right around $68 to $68.50 or so. So work's cut out for it. It's up 4 days, you know, almost in a row. It did pause yesterday, but 4 out of 5 days or so. So good win for XLK. Tough to chase it, but you know, nice performance, nice snapback, nice recovery. Healthcare is much more impressive. As you can see here, we did just close at new highs for healthcare. So while everything is trying to recover from its oversold levels and its 10 or 15 or 20% pullback in some cases, we see XLV closing at new weekly highs here, new all-time highs for XLV. So some very impressive action, good names there in this space to pay attention to. It's up 5 days in a row, tough to chase, but good performance. XLY, discretionary, thank Amazon for a lot of this movement, but it is also clawing back here after undercutting the October lows. If we look here on a weekly chart, we took out last week's highs, and very similar to the S&P 500 now, we'd look up to the highs made in November, up around 110, 111 in this case, actually all the way up to 112. Is sort of the landscape that we would look at here. Tough to chase again, but nice rip here over the positive divergence on the MACD, also present on this retest. On the downside, things that lagged a little bit this week, XLB, no harm though here. This still looks constructive to me. We talked about this as being one of the more resilient sectors last week. It didn't perform so hot. It wasn't leading the charge this week, but I still like this pattern, all things considered. This looks to me like nice little channel, nice little flag here here after making this initial move higher for the first kind of 2 weeks in November. Look at where this pulled back. We talked about this last week, but this never came all the way back down to these October lows. Now, arguably, it was more oversold than some of these other markets coming into these October lows, but it never got all the way back down here and hammered down and retested it. It actually held up the top 30% of this range, and now you can see it's trying to tighten up and perhaps move higher here. MACD inching into positive territory. So XLB bottom tier here this week, but still on my on my watch list there. I think it's interesting. XLU finally trying to resolve this range higher here. Messy. Don't really like tracking the XLU. Some of the other individual components under the hood that are making this up do look a lot more interesting and are trying to emerge for some longer bases. So I'd pay attention to that. And staples right back at it here. 2.85% to the upside, still on a relative basis, puts him in the bottom quadrant here for performance, but you can see it is very quickly trying to reclaim or get back to retest these November highs here. Zoom out, you can see holding above 55. That is a good sign there in the short term. So that, I think, is pretty much everything I had. Looking through my notes now, I think I covered just about everything. Remember the G20, be interesting to see how that resolves itself, and how we open up next week. Could be fireworks or could be a non-event, and the market sort of carries on as it was. So that is it. Thanks so much, as always, for tuning in and watching these videos every Tuesday and Friday. You can find it on the Trade Risk website or our YouTube channel. You can subscribe there. And if you want to get access, or if you want to just check in on the market dashboard here, it's free, it's public, traderisk.com/market-technicals. Try and keep this updated every day. If you do see any data issues there, do let me know. I am aware of that 200-day SMA using total return data, so I might take a look and see if I can adjust that. But otherwise, I'm happy with at least the layout here. I think it gives a good snapshot on a day-to-day basis. So that's it. Have a great weekend, and I'll talk to you guys next week.